Okay, I've got 5 things that you are going to want to know if you are thinking about financing a home in this environment or maybe even paying cash. So I'm with Debbie Calixto. She's a senior loan officer at Loan Depot. She has got lots of great information for you. And we're going to get started with some questions right now, and we're going to dive right in. I also want you to know if you've been thinking about paying cash, this is going to be applying to you as well. In fact, I think, Debbie, that's where we're going to start. Perfect. So the first question I have for you is talk about why somebody who has cash, who wants to purchase a home right now in this environment, why they might want to still think about getting a loan.
That's a great question because people have cash. A lot of times their money is invested. Maybe it's invested in the stock market or something else that's earning them interest. So they have to pull that money out to be able to pay cash for a home. Well, when your money is vested, you tend to make an average of 8 to 12% on your investment. Of course, it's going to go up or down. So when you pull some of that cash out, now your money that you had working for you might not be working for you as much. And even though we're in a high interest rate environment, rates are still almost half of what you can make in the market. So we're probably ranging around maybe the 6% interest rate. So using the bank's money to buy a house as opposed to your cash or all of your cash might make more sense. Also, chances are rates are going to drop. And so you can get into a home now, not use all of your own money. And then when rates drop, we can even save you money that way.
Oh, that's perfect. So we're talking about opportunity cost really in this particular situation.
Yes,
all
exactly.
Right? That's a great thing to think about. What are some other considerations along those same lines as far as cash versus getting the loan?
Tax write-offs. A lot of people who have money need a tax write-off. So for example, I just closed a loan last week for a couple who have plenty of money. I saw one of their accounts only that had over $10 million in it. They absolutely had the ability to pay cash, and their financial advisor and their CPA encouraged them to obtain financing to buy a house because the tax write-off was a better financial strategy for them.
Yeah, that actually makes perfect sense. If you don't have a lot of other tax write-offs, and also a lot of times when people are purchasing in the Coachella Valley, you're thinking about retiring. You're thinking about retiring now, maybe retiring later. Maybe you don't have all those business write-offs that you had before as well, right? Or kids like my kids. Last one just graduated college. We don't have that write-off anymore.
Big difference.
Yes, I miss it.
Yes.
That's the first year we haven't had it. And I'm using my notes, everybody. I'm going to make sure we get through all of the questions that you're going to have. Now, one thing I want to bring up. So, like, I'm in my St. Patrick's Day. I don't know if you have green on anywhere, but we won't pinch her this time. But we're recording this on St. Patrick's Day, March 17th of 2025. Okay, so one of the things that a lot of people are feeling right now is this sort of uncertainty. What is, they're like, we don't know what's happening right now. There's a lot of sort of chaos, and there's, we have, everybody has like a different assumption of what maybe the way things are going. Talk to that fear and sort of that trepidation a little bit.
Yeah, that's probably the big thing that I talk about on a regular basis is now the right time to buy? Is now the right time to invest in real estate? And my answer is always the same. It's always the right time to buy when you're ready to buy. So we can't time the market. We don't know what's going to happen with interest rates. We don't know if rates are going to go up, or we don't know if rates are going to go down. We never know kind of what our financial situation is going to be moving forward, what type of stability we have in our economy. So if you're in a position now to be able to manage that monthly mortgage payment, then it's never a bad time to buy. I would say talk to people from 5 years ago that said, the market's going to crash, and now they're in a position where mortgage payments are higher and rates are higher, and the mortgage market did not crash, right? And so there tends to be a lot of regret because we just don't know. I would say this environment is still a great time to buy because inventory is still really low. After the crash of 2008, the Great Recession, we didn't build for 10 years. And that means that now we're finally building at the rate that we needed to build, but we're 10 years behind the times, which keeps our inventory low. And it's all about supply and demand. So if you have high demand, which is what we have right now, and lower supply, then the chances of property values dropping, it's pretty minimal. So getting into a home now with the idea that, yeah, they might stay stable, they might come down a little bit, but it's not likely that they're going to drop significantly, but yet we can pretty much guarantee that they are going to appreciate in time. I think it's definitely something to consider, and you can get into an interest rate now and know that there's always that opportunity to refinance if rates drop and if you qualify. So again, it goes back to, is now the right time to buy for you?
Right, right, exactly. And I would also add too that one of the things that you bring up is a few years ago and how people, and I had people who were telling me, well, I'm waiting for the market to crash. And obviously here we are, we're 5 years later after almost exactly the day when the lockdown started.
Yes.
And that was a very uncertain time as well. And if you bought then versus the people who didn't and they're renting right now, I mean, the rents have gone up so much too. So people who were able to buy then and now they have that stability of their housing payment every month,
yes,
which is beating rent all day long. If you bought in, any time in that period, I would say, wouldn't you agree with that?
Absolutely.
You see people who rent a lot, right?
Yep.
Right. And you're seeing what their rents are, which would bring me to the next option too, waiting versus, we want to wait. We want to see how things come. We're renting right now. And so you were mentioning something about there's a lot of people who come to you almost too late when they need to get out of a lease. So maybe speak to that a little bit as well.
Yes, that's a very common thing for me that I see regularly, especially amongst the first-time home buyers, right? Or maybe people who haven't purchased in a while, they've been renting. It's been going well for them. Why rock the boat, right? And then all of a sudden they get a notice to vacate, like they have to move out of their house. They have 60 days to get out because maybe the homeowner wants to sell, or I get people calling me that their rent and their apartment complex has increased so much that doesn't really make sense to continue to rent, and so now they want to buy, but yet they haven't really talked to the right person to see are they in a position to buy, right? So now I'm getting calls saying, hey, I need to get financing, I need to be out within 60 days, or my rent's going up in 60 days and I really want to buy now. I don't want to sign another lease and get locked in at this higher rent for a year, but yet they're not quite ready, right? There might be something with their credit that they need to work on, or maybe they need to save a little bit more money. There's great programs out there to help people buy a home, but it doesn't work for everybody, right? So the other thing is maybe they need to pay down a little bit of debt. Everybody's situation is so unique. So I always recommend, if buying a home is something that you're considering in the future, I don't even care if it's 5 years from now, talk to somebody. Yeah, things change, but at least you'll know where you're at now, and you know some things that you can work on to be able to accomplish the goal of home ownership.
Oh, absolutely. And I would say too, and I hear this a lot on the real estate side. It's all real estate, but on the person who's helping you find the homes, I hear a lot of people, they're worried they don't want to go do that mortgage application. And I get actually, some of the stuff that's just online and it seems a little bit, I don't know where to start. And if everybody's afraid to click a link right now, and I get it, and I'm with you on that one.
Me too.
Right? I mean, you don't even want to answer your phone anymore half the time. So what I would recommend, and I do to everybody, and again, you can speak to this a little bit more in depth, is that when the fears that most people have that I hear are they're already a little concerned about their credit and they don't want any sort of mortgage application to make it so that they're going to have their scores go down. So that's number one. Number two is also, I hear people talking about they are worried about they're just getting bombarded with a million phone calls I did that one time. I just shop for insurance rates, let them, fight for you or whatever. I could not answer my phone for like 5 weeks. It was just this barrage of people calling me, right? So nobody wants that, right? So talk to the things that the people can do when they talk to a trusted loan advisor such as yourself. And there are people all over the United States. And if you are in another part of the country, the really good chance that Debbie or I know somebody in that part of the country who is going to serve, not sell. They're going to definitely make sure that you are getting somebody who cares about your situation, who's going to help you do what's best for you and not try to, just sell you into some options. So if you're in Tennessee, let me know, because I know some great realtors there, or anywhere else, and they know Debbie's there too. So talk about that. Talk about those fears that people have, because they're legitimate. We all have these on.
Absolutely. They're great fears. You actually should have those fears. Everything that you just talked about, it's happening on a daily basis. So one thing with me is I am actually licensed through Loan Depot. We are licensed in all the states. So I can assist somebody on a level in anywhere in the United States, which is great. And you're going to find different people out there. You're going to find your typical sales person who just says, oh, I'm sorry, you don't qualify, good luck. But you're also going to find people like myself who really over the years have just learned how to guide people into home ownership. So a couple of the concerns that you have, I would say we've already found a workaround. So for example, we no longer have to do what's called a hard credit pull. We now have the ability to check all 3 credit bureaus, all 3 credit scores on a soft pull, which is very similar to you looking at Credit Karma or some of the other apps that give you that consumer report. We have the ability to do that without it impacting your credit. Once somebody runs your credit, a couple things happen. One, of course, now you have an inquiry, which does affect your credit score slightly. But 2, now it alerts companies who buy that data to be able to then call you and try to inquire about financing. On a soft pull, we're not running your credit, so it actually doesn't alert those people. So as long as you call somebody, like you were saying, you call somebody who actually is trusted, who you've done your research and will actually take the time to guide you, and you don't just do an inquiry online. Once you do an inquiry online, now you're opening yourself up to all the people who buy that data, right? You call me. We do not do the hot credit pull, so you're fine there. I can look at that report, and if there are some credit things you can work on, I can guide you. And if there's not, great, then I'm going to tell you that as well, and I'll tell you some tips and tricks for when you're ready to buy a house. The other thing that we do, and you have the ability to do it too, is we opt you out of solicitation. So the moment I get that information from you to do that soft credit pull, you're going to get an alert via email where you can opt yourself out, but I can also do the same if you like, where we just go on and opt you out of the solicitation for the next 5 years, and that also reduces the amount of calls that you are going to get, because once somebody runs your credit, if you're not opted out of the solicitation, or once you put an inquiry online, it'll probably be 100 texts, calls, and emails minimum for the next couple days moving forward.
Yeah, another reason you don't just want to go online and do this. And so, I mean, we dealt with this. My husband was getting so many calls on his work cell phone. It was a nightmare. Like, he was like, how do I make this stop? So anyway, so yeah, we definitely, anybody that we can save from that nightmare, we'd like to help do that. So also I wanted to talk about too, because right now, home affordability is a situation, and whether or not, you might have plenty of income, you're thinking about retiring or getting ready to retire, or maybe you are retired and you're fine. You're thinking about coming to the Coachella Valley because you want to enjoy the good life, you want to swim, you want to be in the nice weather, you want all these different things, and you want to live here part-time when it's gorgeous, but you're still not ready to just plunk down $500,000, right? And let's talk a little bit about something that I don't think a lot of people think is a really great option for them, but they might be surprised, and that would be manufactured homes that you can, I mean, there's ones for cash, obviously, that can only do cash, but there's manufactured homes out there that are very inexpensive with amazing amenities that you can do a loan on, right?
Yep, absolutely. And we do them pretty regularly because of the affordability piece, or because maybe somebody just doesn't, like you said, they don't want to have a $500,000 home with the mortgage payment that comes with it, and they don't need it. I mean, financially, they could use the difference on the money they'd be spending to invest in something else. Maybe somebody who's younger wants to have multiple properties, right? So why put all your money into one large property, or like you said, retirement?
Right.
Maybe we downsize, or maybe we have a vacation home where we get to access all the great amenities that some of our developments have out here. So getting a manufactured home is very suitable for that. So some of the requirements are it has to be built after June 15, 1976. You have to own the land, so that way we can have what's called the 433A, which essentially turns the property into real property. So there are some financing requirements, but in our area, we have so much availability, and some of the developments are amazing. If you like to golf, some of your HOA dues include unlimited golf.
Yeah.
Or swimming pools, activities. There's just an immense amount of opportunity, especially for those people 55 plus or almost 55 plus, to be able to be in an amazing community that is very, very affordable, especially in Southern California.
Right. Well, and pickleball and tennis and
Yes.
bocce ball and all the things, right? I mean,
Yes.
let's face it, when you come down here, that's what you want to do. You want to get outside and do some of these things.
Absolutely. Yes.
Perfect. Well, thank you so much for taking a few minutes to talk to me, and we can get this out. The more we can help people just get information, I think the better. And to that end, keep in mind, Debbie, again, all 50 states, you can just have a conversation with her. Trust me, we've been working together for a while now. She's very open to just walking you through the process. Neither one of us are hard sell kind of people. We're just here if you need us. You can always get her information. I'm going to have it linked wherever this video is playing in some way, shape, or form. If you're watching it on YouTube, it's going to be below. All of her information is under all of my YouTube videos. You will be able to find her link and her phone number and all the things. If you would just like to have a conversation with me as well, we just talk about some of your plans. Nothing, we're not doing anything this year or next year, but we think we might want to do something in 2027. Give us a call. We'll kind of give you some ideas on what you might want to start looking for and things you might want to do and I'll just give one last little tip here. One thing that I did before we moved here was I knew we were going to be our credit was already pretty good at the time, but I knew we were going to be shopping around for the best possible rates. So I started working with the couple credit cards that we had, and I worked to make sure that they were between 20 and 30% of, say they weren't paid off, they were between 20 and 30% of the available credit. And I did that for multiple months. And then by the time we went to apply for the loan, my credit, it was actually better than my husband's at the time. It was over 800, and I didn't even realize. But would you still? But that was multiple years ago. Is that something you would still advise?
100%. Yeah.
Okay.
Credit scores are actually really driven by the things, of course, make your payments on time, don't have a collection, right? But what a lot of people don't know is available credit is a big driver of a credit score. And a lot of people say, well, I don't have any debt. Like, I don't want credit. I don't want credit cards.
Yeah.
And they're wondering why their credit scores are not increasing. It's because credit scores are based on risk, right? So an auto loan, you're going to need a vehicle. You're going to make your payments probably, right?
Right.
So it's considered lower risk, whereas a credit card is considered higher risk. So having a credit card, you don't need multiple, but having a credit card where you can show that you can manage that ability of the cash being available and make your payments on time is imperative. But available credit, it's even more imperative. So you always have to keep your credit card balances below 30% of your credit limit. So for example, if you have a $1,000 credit limit, that balance should never be more than $300. The moment it goes above that, your credit scores are going to drop. Well, one thing that I tell people is 25%. So when you said 20 to 30, you were spot on.
Okay.
Because at 25%, if for any reason you don't pay the credit card off that month, you're going to have interest that'll post to your balance. Well, if you're running it always at 30%, the moment that interest posts to it's going to push you over.
Right.
So 25% is where you're going to want to be. So again, these are some of the things that I would talk to you about if you were thinking about buying the home in the future. There really is no pressure. That's why, Lisa, you and I work so well together because we think the same, right? Like we just want to help people. Right. And whether you're ready to buy now or in the future, that's okay with us. There's people call me and they're like, I don't want to waste your time. this is what I love to do.
Yeah.
We're passionate about what we do, right?
Right.
So for us, it's never a waste of time. If you want to take the time to learn, we want to take the time to teach, right?
Yep.
So though, again, keeping your credit card balance low, that is something that most people don't know, but that's some of the advice that you would get by talking to us.
Absolutely. And we've both been doing this a long time. At 26 years for me.
22 years.
There you go. So we've been doing this a long time, which means we aren't the people who are like, oh, well, we got to get something tomorrow. It's like, I've worked with people for years before it was really the right time for them to do something. But I will say, when I started doing my little, I'm going to make sure my balances, cards I didn't even use, we just kept them in the safe. And in fact, I think I worked with 2, it might have even been 3 credit cards at the time. I started that over a year before we were actually going to be getting the loan, because I knew that I would have some time to do that. So again, another reason that we would love to talk to you, just so you're in the best position once it's the best time for you. So that is awesome. Thank you so much for taking some time. And I swear I learn something new every day. And Debbie, I should have kept it at 25%. I think that's the tip I got there. So again, hope this helped everybody. And we're always available if you need us. And have a wonderful day. Bye.
Bye. Thank you.
And cut.
That was great, except my stomach kept growling the whole time, so I hope